Hey, good morning, everybody. Today is Friday, August 14th, 2015. My name is Cliff Backus, and this is your daily video market review. Markets gave back early gains yesterday as the S&P 500 and the NASDAQ Composite both closed slightly lower on very light trading volume. Declining issues bettered advancers by 3-2. The New York Stock Exchange advanced decline line continues to look bearish and has looked bearish since mid-May. New lows bettered new highs, also by a 3-2 margin. We have to go all the way back to July 15th to find a trading session where new highs have bettered new lows. That noted, our new high, new low indicator has switched to a buy signal. This means simply that the 5-day exponential moving average of the difference between new highs and new lows has turned positive relative to the 10-day. The new high, new low indicator is a secondary indicator and should be viewed with some caution, but it may be the first indication that this market wants to push a little bit higher. Our market timing model is back showing a don't buy signal on the market. Our market timing model is our primary market timing signal, and a don't buy signal indicates that we should have our stops in place. We should liquidate any position that, if stopped out, would result in a loss, and we should not be adding to new positions in our portfolios. The O'Neill market timing model is showing an uptrend under pressure. Our distribution count remains reasonable on the NASDAQ, but high on the S&P 500. Large capitalization stocks continue to handily outperform small yesterday and are outperforming on a 10-day moving average basis. Our swing timing model is indicating a neutral condition in the market. Overall, we're neutral on the market. The major indexes have made no appreciable progress since February and have become increasingly volatile. This is a good time to err on the side of caution. Okay, what we're looking at here is Moody's list of 177 industry groups sorted in HGSI, high growth stock investors, by 5-day percentage price change. The reason that we look at this is that by noting where the strength in the market is on a daily basis, we can get an idea of where the power in the market is rotating to. The basic premise of momentum trading, which is what we do here, is that we need to identify where the power is and get out in front of it. So here's where the strength in the market has been in the past week. In the past week, we've seen precious metals up 9.9%, courier services up 9.2%, electric and gas marketing and trading up 8.7%, rubber and plastic up 8.6%, and consumer electric and appliance stores up 5.8%. We're definitely seeing some rotation in this market. Let's take a look at the Russell 2000. We've been keeping an eye on this downtrend in the Russell 2000, and the Russell 2000 earlier this week undercut support down here in the 1211 area. Really like to see the Russell get back above that 1211 area. Let's look at the NASDAQ Composite. The NASDAQ yesterday, after starting higher, closed down 10.83 points, or 0.21%. NASDAQ closed at 50.33. Trading volume was very light yesterday, indicating that neither the bulls nor the bears were terribly excited about the trading session. For you followers of William O'Neill, we are on an uptrend under pressure. We have 4 distribution days in the past month on the NASDAQ, which is reasonable for this point in the bull market. NASDAQ right now is bracketed by support down here in the 48.88 area and resistance up here in the 51.64 range. But we've been watching this little mini area of support right here. And you'll note that yesterday we came down, we tested that, and held. Right now the NASDAQ is on a don't buy signal, which indicates that we shouldn't be adding to our portfolios and we should be liquidating any position in our portfolio that if stopped out, would result in a loss. Let's see what the S&P 500's up to. The S&P also opened higher yesterday, but ended the day down 2.66 points, or 0.13%. S&P closed at 2083. Like the NASDAQ, trading volume was very light, indicating that neither the bulls nor the bears were particularly excited yesterday. Our O'Neill model is showing an uptrend under pressure. We have 7 distribution days in the past month on the S&P 500, which is a fairly high distribution count. The S&P has support down here in the 2044 area, but more importantly, the S&P has been respecting its 200-day moving average. Yesterday it came down and tried to test that area again before pushing a little bit higher off of that 200-day moving average. We have resistance way up here in the 2134 area. The S&P also is on a don't buy signal. I want to take a quick look at a stock here. Yesterday we talked about Luxoft Holdings. Luxoft develops custom software for organizations in the financial, travel, technology, telecom, auto, and energy industries. We pointed out that Luxoft was in this base-on-base formation. It's a second stage base-on-base formation with a pivot point of 63.56. We pointed out yesterday that we had a pocket pivot in Luxoft, which would allow you to get into this stock a little bit early prior to the breakout. Yesterday, Luxoft gapped higher and actually broke out of this second stage base. Trading volume was fairly significant. We're seeing a lot of trading volume on up days in Luxoft, which indicates that institutional traders are buying the stock. Luxoft has a 62% checklist rating, and given that the market's on a don't buy signal, Luxoft can be bought by aggressive traders that are willing to take the chance at this point in the market. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. For daily access to our model portfolios, trade updates, and more up-to-date information on our trading strategies, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, Opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.